The hottest housing market ever has finally peaked. Prices are finally starting to come down back into more normal territories, and we're starting to see the housing market return to much more normal levels than they have been over the past 2 years. And even Moody's chief economist has staked his flag in the ground as now being the time that the housing market has moved from bubble and exploding prices to finally back into correction territory. But let's be really careful with terminology here. He was very specific in using the word correction and not crash. Crash is what we saw in 2008, where nationwide prices were down 20%, and in some markets up to 50, 60, 70, 80% crashes. But now he's saying we're going into a correction territory where I think we might see prices come down anywhere from 5 to 10%, with definitely some markets being more exposed than others. But the most important question is, why is right now the time that we've moved from housing market bubble and skyrocketing prices to now the bubble bursting and we're starting to slide down into correction territory? But before we dig into the data there, please don't forget to smash the like button on this video, subscribe to my channel so you don't miss any more great content on real estate and finance. So as we start looking into the data, let's start first with new home construction. I think it's really important to understand what's happening there because I think that's a leading indicator, and we're not going to really see all of this data play out in existing home sales for a couple of more months. So I think that's a good place for us to start. The cost of constructing a new home has absolutely skyrocketed over the past 2 years, as many of you already know. So a big driver of this is, number one, the demand for homes, and number two, the cost of construction. The cost of construction is broken out by a number of different things, but materials and labor are probably the biggest two buckets. Labor has definitely gone up, but materials are what's really skyrocketed over the past 2 years. I'm sure you guys have all heard of the lumber shortage that we've experienced, and this drove home prices absolutely crazy. So the National Association of Home Builders has said that the cost of constructing a new home has gone up by over $20,000 just because of the cost of lumber. Now, obviously, if you're looking at a smaller home, that might be a little bit less, or if you're looking at building a much larger home, $1 million plus, or 4, 5, 6,000 square feet, that's gonna be a much bigger factor, but about $20,000 on average for your average home. Well, the good news here is that we are finally seeing a return back to normal for the lumber market. Let's take a look at this chart here. Now, as we look at this price here on lumber futures prices, you can see that in 2001, the market absolutely skyrocketed to over $1,600 per 1,000 board feet of lumber. And we saw another spike here in late 2021, early 2022. And now it's continued to drop down to now we're about 600, which is about where we were in 2018. And I think it's going to continue to decline as the market corrects. And we'll probably get to more stable prices between $300 and $400. And once we get to more normal prices, I think we're going to continue to see new home prices fall as builders compete with each other for buyers, and they'll price in these lower costs of building materials. So not only has the cost of building a new home gone down because of the lumber decreasing, but we're also seeing demand in the market really fall off a cliff. And honestly, this is something that we haven't seen in a number of years as far as the level of demand for new homes. And the reason for this is there's a lot of pressure right now in the market. With mortgage interest rates skyrocketing, this has priced a lot of people out of the market. Maybe some of you know anecdotally people who were originally under contract for a home, but due to the increase in rates from below 3% in January to now over 5% where we are today, that has made the cost of mortgaging a, let's say, $400,000 home from then until now, the price has gone up significantly. So the mortgage before might have been about $1,400 just for the principal and interest, and now that's up to about $2,000. So that's a difference of $600, which is strictly going to the bank. This isn't going to pay off a nicer, bigger house. This is literally just the cost of financing. So because people originally qualified for that loan when they started building the home, now so many people have been priced out because they didn't have the cushion in their budget to afford a home that's $600 more a month. And we're actually seeing this massive drop in demand play out in the data just as you would expect it to. So looking at the Fred data here, this is new single family homes sold in the United States, so new construction. You can see a nice trend line from 2011 continuously up and up and up with a little bit of bumps here and there. Obviously some craziness in 2020 and into 2021. And probably most revealing is to look at what happened here in December and January of 2021, where we were between 800 and 900 units sold per month. And then as soon as interest rates increased, you just see this massive decline. So from February all the way down to April, and I'm sure we'll see the same thing in May and June, just all of this demand falling off a cliff. So we're at levels here under 600 that we haven't really seen since 2018 and 2017. And I fully expect this to continue to decline. And if you've ever really paid attention to the new home building market, you know that builders really like to overcharge for the homes that they're building relative to other newish homes in the area. Usually the price per square foot that you pay for a brand new home, there's quite a bit of a premium built in there versus what you would expect to buy an existing home. And so new home builders, especially in areas where there's a lot of new construction, drive up the price of other homes because they're overcharging, and people have been willing to pay that before. Now you're really seeing in the data that people just can't afford this anymore. It's really an affordability crisis that we're seeing. And so this demand is falling off, and we'll likely to continue to see it falling off further. And I want to show you guys another fantastic chart that illustrates this just from a different lens. So looking again at the data from Fred, we can see the months of supply of new houses in the United States. And so this is basically what this is measuring is if all construction ceased, how long would it take to sell through this current inventory? So December 2018, it would take 7.5 months to sell through all of the new homes in the US at the existing rates. But you can see this dipped all the way down to 3 months, which is the lowest we've seen in a long, long time. And then slowly risen and dropped just as you would expect, some seasonality to this. But again, the same thing that we saw on the other chart, we're seeing play out exactly here. So we went from about 5 months of supply all the way up to 9 months, which is something that we have not seen since 2010. So this was really at the depths of the housing market crisis before. We're seeing similar levels now, and just look at how quickly this accelerated. Again, this isn't the end of the acceleration. I fully expect this to continue going up, and we'll probably be at levels that we haven't seen before. So really what this means is we're really going to see price decreases coming first in the new homes market, because these builders have all these homes. It costs a lot of money for the builders to have a new home that's ready to sell that they can't sell. And so they're much more incentivized to lower the price of the new home, to get rid of it, get it off their books, than they are to keep it and hope that somebody will pay that massive price for the home. It's way better for them to sell it than it is to keep it. So this slowdown in demand has not just impacted the new home construction market, but also the existing home market. But of course, this takes a lot of time to really shift from the new homes to existing homes because there's just so much more inventory. So the data takes a little bit longer for itself to play out. Additionally, we've seen a bit of FOMO from people who were on the fence about jumping into the market, but as they saw interest rates skyrocketed, they thought, hey, maybe this is my last chance to jump into the market before interest rates hit 6 or 7%. And so there's a bit of bumpiness in the data that we've seen. Now, one crazy stat that I've come across for existing homes is that 1 in 5 home sellers has had to drop the price of their home in the last month. Now, this is just insane. 20% of all people selling a home have had to reduce the price just to get interest. I think this just speaks volumes to where the market is starting to shift. And honestly, most of this probably isn't from homes that were priced reasonably, but I think a lot of home sellers were massively overpricing their homes because that they knew they would get offers for it because the market has been so tight. But now we're seeing a lot of that come back to earth where people just can't list their homes at exorbitant prices because they're not getting any demand. And so they're having to first lower that back down to really where the market is at on average. Now, taking a look at this Redfin article, we can see some really interesting things happening as far as demand for homes. So focusing on this paragraph here, where we're talking about leading indicators of home buying activity. Number 1, fewer people are searching for homes for sale on Google, and these searches are down 13% year over year. So again, a huge leading indicator to what's happening. The seasonally adjusted Redfin homebuyer demand index is down 12% year over year. There's a chart below that we'll get to here in a second. And this is the largest decline since April 2020, when the pandemic caused just a pause on home buying activity. Another important point, touring activity for the first week of January through the end of May is 29 percentage points behind. So a massive drop off in people going and visiting and touring homes, which obviously leads to fewer people purchasing homes. And then mortgage purchase applications are down 16% from a year earlier. So people aren't applying for mortgages because they're so expensive. Now here's a great chart that I referred to earlier about how just mortgage payments are so much higher than they were before. You can see the blue line here in 2021, under $1,750 for the average home, and now we just massively increased. This is an increase of about $700 a month, which again is strictly going to the bank because of massively increased interest rates. So taking a look at this chart, this is Redfin's home buyer demand index, and you can see home buyer demand is down about 12% year over year, and we're massively down from where we were in January and February of 2020. So to understand this chart, it means that January and February of 2020, the demand that existed then is about 100. So we're still above where we were at that point. So there's still, I think we're at about 135 here. So that means 35% above where we were then. But you can see just this massive drop off. And again, this is coming, I think, strictly due to the interest rates. So you can see this demand was fairly constant here throughout the year. And as soon as we hit March or April, which is when rates spiked, you can just see demand fall off a cliff. And again, I think we'll see this come back down even further. And one really, really important point to not forget is that the housing market is very seasonal. Usually we see a massive drop in demand in the winter months as people aren't moving. And then in the spring and summer months, we see massive increases in demand as people are beginning to move and switch jobs. And so what we're seeing right now in May is that massive drop off in demand, while we should actually be seeing a massive increase in demand because now more and more people are moving. So looking at this chart here, you can just see how seasonality affects the housing market. Again, usually spring and summer months are peaks. So you can see this is consistently played out over time. But then again, as we would expect the housing market to be peaking here in May, June, July, August, we're actually seeing the opposite. We're seeing the housing market demand fall off a cliff. So I think this has massive implications for what's happening in the future. And again, is pointing to the housing market is starting to slide into correction territory. All right, guys, I really hope you found this video useful and helpful as you start to understand what's going on in the housing market today. Please don't forget to smash the like button on the video, it really helps me out, and subscribe to the channel so you don't miss any more great content on real estate or finance. Thank you, and I'll see you in the next one.